Hi guys, welcome back to the channel. In today's video I'll be going over the Disney stock and just giving a general analysis of the company and what I feel as a whole. But before we get into the video guys, definitely consider subscribing. I'm on a goal to get to 2,000 subscribers. Also, as well, if you're generous, definitely give a thumbs up and give me a comment. It helps me, really helps boost the channel out to more of a bigger audience guys, and helps me grow. So yeah, basically I'll just be going into a few different points. I'll be just giving a few bit of basic information about Disney, the company health and balance sheets, what certain assets do they own with regards to obviously cash flow and cash in and out, valuation of the company, the share price, etc., whether I think they're a fair value or not. Also dividend news, obviously information about the dividend, and then finally just some general latest news about the company. So first look at the key information guys. So obviously as you can see on the screen now, the Walt Disney Company is the name, ticker symbol DIS, and they're on the New York Stock Exchange, founded back in 1923 by Walt Disney and his brother, in the movies and entertainment industry, in the media sector, and a huge company worth over 200 billion in market cap, with 1.81 billion shares outstanding currently. And you can see there a link to the website www.thewaltdisneycompany.com. So next we'll take a look at the company health and financial position. So as you can see, I wouldn't take too much notice of the short term, focus more on the long term, with the assets being higher than the liabilities. If you don't know, assets is something that gives you income, liabilities is something that takes it away. So if you've read Rich Dad Poor Dad by Robert Kiyosaki, you'll know what that means. I'll link that in the description below, that book, fantastic book. Excuse me. So as you can see, next part of the balance sheets is the assets. So long-term assets is basically obviously things that put money in the pocket, which I'll show you at the end of this segment of the video. I'll show you Disney's assets pyramid to say. So they have long-term assets, physical assets. So you can see 131 billion assets, physical assets 36.1 billion. Receivables, if you don't know what that is, it's money due to be paid from subscription services, or basically outstanding money that are due to be paid by customers. And then inventory is merchandise that they sell to customers. So next we have the liabilities plus equity. So what the equity is the liabilities minus assets minus the liabilities, so that leaves you with 99.6 billion worth of equity. Obviously the debt is 64.4 billion, but as long as they have almost 100 billion worth of equity, which is quite a high number. So as I said guys, next I'll be showing you the media empire. This is I think it's a year out of date, so there's some things that aren't on there quite yet. So you can see the total assets worth, and then obviously all the little spider, the chain of command to say. So you've got consumer products worth 9 billion, Disney Media Works worth 32.5 billion, Parks and Resorts worth almost 30 billion, and then the Walt Disney Studios just over 16 billion. So there's some notable, obviously you'll know a lot of notable companies on there, such as Lucasfilm, Marvel, Pixar and DreamWorks, obviously all huge. So that is Disney's media empire guys. They've got a lot of fingers in that. They've got the fingers in a lot of pies here. So next we'll just take a look at the debt to equity. So you can see the equity in the blue is above the red. That's all that you need to know really. And the cash and equivalents is at the bottom. So obviously companies don't really carry loads of cash. It's not, obviously they have more assets and other investments. So the debt is 64.421 billion and equity is 99.625 billion, as we've said. So it's 64.7% debt to equity ratio. So next we'll just take a look at the valuation of the company guys. So the current price is seen to be overvalued by 26.7%, as it currently stands at $124.97. And the fair value, according to Simply Wall Street, would be around $98. So maybe not the best time to buy right now, but especially if you're looking at Disney as a growth sort of stock. So next we'll take a look at the dividend. So Walt Disney does not currently pay a dividend. Obviously it gets a none out of 6 score because there is no dividend to talk about. In this instance they did pay a dividend twice a year, I believe. I'm not too sure about it, correct me if I'm wrong. But the forecast dividend is 1.18% for the next year, I think it is. But the dividend may not be coming back. I'll be sort of going into that shortly with you guys when I get onto the news segment of the video. So it is forecast in 2021 in September to have a 1% dividend yield and pay $1.24 per share. That's what analysts forecast. As you can see, the big dip when obviously it's been taken away, but the forecasters do see it coming back. So as you can see, Disney's last dividend was in January 2020, and they paid 88 cents for that, and the next forecast one is to be 100 cents, so it's an increase. So as I said, guys, we're going over a bit of Disney news now. So Walt Disney Co. has basically said they're going to restructure the media and entertainment business to accelerate the growth of Disney Plus and other streaming services as consumers increasingly gravitate towards digital viewing. This doesn't really surprise me, guys, as they want to try and compete as much as they can with Netflix. Netflix, obviously, the leading company in this market at the moment. So obviously Disney have huge pulling power themselves, so it'll be an interesting battle. So they want to separate the development and production of programming from distribution to be more responsive to consumer demands. So basically being more about the customer. So an activist investor named Daniel Loeb, I think I've butchered that name, so I apologise if that's wrong. A hedge fund third party urged Disney to forego the dividend payment, so basically to not start paying a dividend again, to double its programming investment into streaming. The shares rose nearly 5%, trading at $130.06, excuse me. So Disney launched Disney Plus back in November 2019, and it's exceeded its targets by more than 100 million streaming customers worldwide to Disney Plus, which is obviously good for business for them. Really great idea, Disney Plus, I think. So again, Loeb, oh my god, I don't want to say that again, but he's urged Disney to cut its dividend to increase spending on TV shows and movies to sign up new customers more quickly. Although Disney's chief executive, Bob Chapek, in an interview with CNBC, said the company is planning to increase its investments in content, but he did not say if they're prepared to cut its dividend or not to finance this strategy. Interesting, guys. So whether Disney will be not bringing back its dividend, we'll just have to, only time will tell. But I do think things are looking promising for them for the future. If they do bring back the dividend, great for investors, but even if they don't bring dividends, I think they could be well worth the investment in the future. So I always say myself, if you're a consumer of certain products, it's not a bad thing to invest in. I wouldn't use that as your number one rule for investing, but it's not too bad, especially if you're a beginner. So yeah, that is pretty much it on my video today, guys. Don't forget to give a like, comment as well. Let me know what you think of Disney, if you have them, if you want them, if you're just a general fan of Disney. So on that note, I'm going to leave you to it, guys. Take care. Bye.